Hello all and welcome to this case study of GBPUSD. I'm going to be showing you exactly how this trade was found for the sell and now, as you can see, the buys that we got earlier on this week also. So I'm going to be breaking down this trade, kind of showing you the whole cycle of actually finding it and understanding where we're trying to go long term. Okay, so before we go into that, just show you the Discord. I had this up before I started this, but it's kind of jumped. So let's find it again. Okay, so you can see this is our Discord. This is where we actually share all our trade ideas, and you can see all the members talking, sharing ideas with each other, helping each other win, and that's what we do. Okay, so here we are. Okay, so this is what I was looking for. So you can see sent it to the group. Okay, the 14th of September. Okay, and at this time you can see H4 order block hit. Look for smaller time distributions, and then we take our entries from there. Okay, so this is one that I wasn't quite set to actually put a pending for, okay, a sell limit. So I actually let it play out and then I actually got in. Okay, but upon doing that, I saw there was another higher 1 hour time frame that we can then actually use. Okay, so I'll go into that. I'll dig into that right now and show you exactly how we actually did get into this trade. Okay, so yeah, we just break this down, go into my trading view. Okay, so we start off on a monthly. Okay, we start off on a monthly and we can see this whole price movement over here. Again, looking at market structure is always the same. Take out these lows, and then we start doing this. We create all these IPAs up in this area, and then we head down again. And we all know what happened over here. Okay, the 20th of March, okay, 2020, COVID hit. Okay, and I always show everyone this that people are not even aware of that even happened. Okay, and why it went down to that area. Let me go GBP, USD, and what broker was it again? I think was it IDC. Okay, why price came to this area over here specifically. Okay, boom, hits it. And again, we've got pricing since 1985. Again, I wasn't even live at that time, but we understand why it happened over there. We've got IPA, we've got that demand zone and various other things. So price slams into that area. So we'll go back onto this broker over here, which I do use to mark up my daily trades. Okay, so boom, you can see all of this market structure in here. And right now we've got no context, okay? But when I actually bring my drawings in, then we've got more context. Okay, so we see the same things over and over again. We had this low that was created here in 2016, had this low here that was created in 2019. We see that as an equal low, we see that as a target, and then boom, we take it out. When we take it out, we always know it's going to connect to something. The markets are like a chain, it's always connecting to something. So I just shown you that 1985 pricing that was way back there. It tapped into it, fills the IPA, and then we make the run up. So when we was making that run up, okay, from here, okay, and I do have the print screen of this. I'll probably show you at the end of when I actually got into this price action here. Crazy move, absolutely. Once we was in that area, all we was focusing on, okay, and I'll go into replay mode. All we was focusing on was to get back into this zone over here. Why do we want to get back into that zone here? We just understood that liquidity was taken here, tapped into that 1985 pricing, and then we had an internal high right here protecting what? Okay, protecting the supply in this zone. So once we tapped into here, my main target is TP1 over here. And you're probably thinking TP1 all the way over there on a monthly. Yeah, because we know it's going to happen long term. And just because it's TP1, it doesn't mean 444. That's my favorite number, number 44. Just saying. So when we tap into the zone, I know this is going to be TP1 and this is going to be TP2 and potentially TP3 just above this high hit. Okay, when I say TP1, it doesn't mean we just hold one trade forever. Okay, TP1 meaning this is my first target area. I know it's going to come into the zone. So along the way, we could get into maybe 5 trades, 10 trades, 15 trades, who knows? Okay, you catch it as much as you can because you know minimum, you're going to come into the zone. Once we did, I said, cool, let's take out this internal high over here. And then we're going to go into this area. Okay, so since this happened in COVID 2020, my ultimate target was to get up into this area here. Okay, however many trades we managed to take off that, it was quite nice. But we know ultimately minimum, we're going to get 2,200 pips in total or more. Okay, because again, this is on a monthly, on a 15-minute, 1 hour, 4 hour, you catch various entries of the rebounds, it pulls back, you enter again, it pulls back, you enter again. So you can easily turn 2,200 pips into 4,000, 5,000, however much you want to enter, however aggressive you want to be in this chart. Okay, so when we see this playing out, okay, that was just the main target. We knew minimum we're going to get into there, minimum. Okay, so when we finally do it, okay, next candle, when we finally do it, clean, It's done. We knew that was going to happen. Okay, and this happens all the time, and this just becomes part of the nature of our trading. So I'm just going to X this out, go into the live charts right now. Okay, you can see my arrows of what I kind of want going forward. You can see what I want going forward. Okay, obviously we hit this area first, and then we potentially go into here. Okay, but why am I so confident this is going to happen or could potentially happen? Again, it just comes with time and understanding these markets and understanding what we need to do. So once we had this high over here, we understood that this specific candle in 2014 took out the liquidity in there, took it out, and then we ran to the downside. Okay, so we know there's a lot of money stuck in this one candle. There's IPA over here. Okay, there's market structure breaks. We've got various things why it'll be interesting to come over here. Mainly this liquidity wipe, this candle that's been left alone since 2014. So ultimately, I want to get back into that zone. If we use the fib also, let's just say this was a whole trading range, okay, from this high to this low over here. Okay, we see where our premium zones line up. It lines up with that supply zone in here. Okay, and I don't know why this is actually yellow. Okay, let's change this to supply. Okay, we want that supply zone in there. That's where the whole thing started from. Okay, that's where everything started from. All the shift down, it started from there. So as we know, the markets are like a boomerang. Where you throw it from, it tends to curve and come back. Okay, so understanding that, we know we want to get into that area. We know retail traders are looking at this area because what fib level is that? Again, you guessed it. And if you haven't understood by now, okay, we know what level that is. That's 62%, 61%. I round up all my fibs. Okay, so it's not 61.8 or whatever else. It's just 62, 71, 79, 89. I round it all up. Okay, so we know what level that is. We know what type of traders are going to be looking at this area specifically right here. Okay, so ultimately, we just need to get up into that area. But it's going to take some time. As you can see from here, it took 1 year and a bit, and it's now floating around this area. I now want a rebalancing in here before we shoot up again. We've now created some liquidity here also, okay, to take out. So we see all these things lining up. We see all these things lining up. Now it's just a matter of time before this happens. So we need various fundamental aspects. We need various kind of technical analysis and just various other things to line up for us to actually make this move happen. So now you understand what we're looking for on the whole, on a bigger time frame for the months and years to come. Let's drop it down one time frame. So now we're on a weekly. Okay, let's just adapt this. Okay, just move this arrow. I've got OCD about these kind of things if you can't tell. Okay, so when we're looking at a weekly, we start distributing in this area. And I say, cool, minimum, we should come back into this IPA here, this demand, and then we should rise up. We could potentially drop lower because once we actually done our ST spring test, we didn't actually do the test properly. We left this IPA over here and didn't complete it. So I know there's still potential of us reaching down in this area. Again, we see the price levels are at 19,200. Again, 20s, 50s, 80s, and just general zeros in the market attract price a lot. So if you just look at your sidebar, which is why you see my charts look like line paper, okay? With all these lines, they're all kind of attracted to whole numbers, as you can see here. Okay, so when we're looking at that, you start to understand why price should go into certain areas. Okay, so again, we lined up this IPA with this down candle. So we understand why we want to get into the here on a weekly. So for that to happen, we need various other things to happen and line up also. So now drop it into the daily. And now this is where we start looking at more market structure. Okay, we start to understand what we truly want, what we want to see. So let's just take it right back into here. So this is that price level that hit 1985, and we'll know what happened in March 2020. Okay, boom, we've got that low. And then we set off, okay, created this low here. So I was wondering, are we gonna make another low? But no, now we turn into a bullish trend. Okay, we make this low here, make that new high. So now we officially in a bullish trend. From there, why do we know we're in a bullish trend? Because we had this high over here. Okay, we take it out. That was the target. Okay, that was the target. We took it out. So now that was a liquidity wipe or breaker structure. Okay, it could be a breaker structure, which it was, and it was also a liquidity wipe. Okay, so that's all done. So once we understood that, we're bullish. So what do we naturally expect from there? Again, get your fib from the low to the high. We look at our premium zones, 71, 79, 89%, and then we see which one logically makes sense. And this one logically made sense. Boom, top of the body, 50% of this specific candle. Okay, this specific candle in here, top of the body, 50%. We expect that to be our entry zone. Okay, so the wicks went past, but where does the body close? Right here. So boom, you get an entry. Away you go. Now you're targeting this high. So just understanding simple market structure, you just target this higher, boom, that's 520 pips. If it goes higher, great. Why do we want it to go higher? Okay, you already knew what our target was on the monthly, right? We wanted to come all the way back up into these zones here. Okay, so I already knew taking this out should be no problem. Why else would it be no problem? We understood that there was IPA over here. Okay, we had a very thin order book right there. Okay, very thin order book. And if I just get this out, okay, just do that. We understand we had a very thin order book right there. Okay, so naturally, the algorithm is going to want to show that. Naturally, institutions are going to want to get back up into this candle because they're losing money there. So breaking past this high should have been no problem at all, which it wasn't, as you can see. So we continue moving. We continue doing our thing. Okay, why is this not deleted? Okay, it doesn't want to go. I don't need you no more. Okay, where you go. So we had the IPA over here. Once we broke past that level, we also knew we were going to contest this high over here. As you can see, we fell very short of it. But naturally, retail traders will draw that as what? Equal highs. So we know there's going to be a ton of orders in this area now. So now that creates the liquidity. Okay, so once we create that liquidity, we drop back into this zone right here. Okay, and let me just exit this for a sec. And I think I still got this open. Perfect. Okay, it's the same thing that happens time and time again. Okay, we get this low created, we get this high created. It's just a trap. So once you start looking at this specific high right here with that break of structure, we understand that this is now a trap for the future. Okay, it doesn't matter what time frame you're on. It could be the 1 hour, daily, monthly, quarterly chart, which is the 3-month chart if you don't know. Okay, we create this high and then we come back to this area specifically because we know the institutions want their money back, break even, and then away they go, take out everyone in this area again. And it's just a thing that happens time and time again. Okay, so we shift back into this. We create those highs. And just like that picture I just shown you, we knew straight away, this area here now becomes of interest where we could potentially buy to take out these highs. And what do? Yeah, it took some time, very messy, but we eventually, again, tackle this high, take that out, drop one more time back into this low here, this demand zone, and then we spike up again. Okay, mission accomplished. Let me just go into the weekly just to show you exactly what's happened. Okay, from that zone we was talking about right here. Okay, it just came into here, boom, mission accomplished. Why is it now interested in this zone? Okay, this is that demand zone. Okay, on a weekly. So we got that supply zone, sorry, on a weekly right here. So price comes into it, taps into that. So from there now, again, what do you notice? We're doing the same thing again. Okay, same highs that was created here. Now to delete this. Same highs that was created here. We do that again. Okay, you saw the previous picture. So now we retrace and bounce off this area. So let's go back to the daily and we start breaking this down from there. So once we do that now, we understand that we've created this high. Our long-term objective is still to go higher, but what can we see in the meantime? So we start distributing in this area. On a 4 hour, that actually looks beautiful, this distribution here. Okay, with that sell-off, boom, broke structure, made these lows, broke structure here, done. Head up, don't quite come back into this area that I wanted. We make IPA here on a 1 hour. Drop slightly lower, another breaker structure, come back up, and then we make a move down to take up this liquidity right here. Okay, so again, liquidity wipe at the low. Then we come here, we create these lows right here also. So now we know we've got this low right here. So now this is where we start to find things interesting because what would we like? We knew this supply right here, this supply right here needs to be fulfilled. Okay, this supply right here needs to be fulfilled. Ultimately, what have we done? We've now taken out these lows here, and now we've made equal lows here. So we know that's a target for the future. Again, if I just show you that picture, okay, let me just exit this. If I just show you this picture again, it's just the same thing that's happening again. Okay, we create these lows here. Price is going to want to take it out and then make that move again. So we see this time and time again on our charts. So we know that's a target for the future, which is why this I is here. Okay, but in the meantime, before that happens, what would we like to see? We want to see this supply here get fulfilled. So again, I'll grab my fifth and highest point to the lowest point. Again, what level has hit the 62%, which is the retail level. So we hit that 62%, but we know it's not going to take out this low quite yet until the premium levels are filled. Why is that? Because the institutions, they control this market essentially. Okay, they essentially control this market. If they're losing a lot of money here, why would they let a ton of retail traders win right here at 62%? That's not going to happen. They'll let maybe some people win, okay, short term, and it's not short term because this is daily. They'll let some people win short term, but I can promise you that 62% is never going to take out this low. Okay, more than likely 90% of the time it's not going to take out this low. It's just not going to happen. Okay, 62% to break this low is just not going to happen. So we understand that we still got some price that we could potentially fulfill at these premium zones. We've got 71, 79, 89% left. We've got IPA at H1, and we've got the supply right here. Okay, 41,020. Again, what did I say about 20s, 50s, 80s in the market? So we know ultimately we want to get there. Again, we start accumulating here. So this is how I know now that ultimately I'm trying to get into this level here, so I can start working my trades to get there. So when we look at this now, what do we see? We create that external low here, create this external high here. In that process, we broke the structure, which now tells us that we are bullish. Price wants to go up. Before it goes up, what's it going to do? It's going to come back for these lows over here, which is that demand zone. Once we get that demand zone, we're going to head back up, back into this area here. Why? The supply over here. And then we head back down into demand. And then where's the next supply that we're going to be targeting? Above there. So this is the ultimate game plan of what you want to see. So now, how do we actually execute that? We drop into the 4-hour. We start to see this market structure more entwined. So again, I'll take it back to where we're just looking at on a daily. Okay, we see this right here. Again, that's that external low I was talking about. Okay, on a bigger time frames, that's that external low I was talking about. Boom, we start making structures to the upside. Breaker structures come here, makes another low, another high, lower low, lower high, sorry, higher high, lower high, higher high. And then from there, we create this external high. So now I know we broke structure here. I now know potentially it's only a matter of time before we come back down to rework the market. So again, you grab your fib from this low to this high. And again, look at our premium zones, 89%. Again, the way I look at fibs is if you went shopping, would you rather get 60% off or would you rather get 80% off or 90% off? And I'll rather definitely get 90% off. So when we see the fibs, I'll just put that back. When we see the fibs, I'll definitely rather get 90% off. So now we need something to line up with that area, which we found over there. We got entry. There's a 1-hour order block over there. Boom, we hit it. And then we start rallying up. So now we understand that there's still the supply here on a daily that we would like to catch. Okay. So price comes back down, does its thing, again, making lower lows, lower highs, lower lows, lower highs, eventually hit this area that we liked and took a trade from. And then we start rallying up again. So I wanted this high to be taken out. Okay. We made this here, consolidation, dip down, and then boom, we broke above. So now I know, cool, we just made this high over here, made this low over here, another high, low, eventually reach this area here, we make some highs over here. Again, is that equal high again? What is it protecting? You always ask yourself, what is it protecting? It's protecting this H4 supply zone. Okay, protecting that H4 supply zone. We know we want to get into there. So again, what does it do? It creates this high to make people get in where? Here, again, what are people doing? They join this whole area. Okay, join this whole area as their resistance. Where they're putting a stop loss. Okay, above all these areas here. Okay, all the areas here, stop losses. So now people are in this market, they get drawn in. They're selling, they're happy. Whoever does not take profit here is about to be sad. Okay, it's about to be a sad time. So price comes into here, tap, and then we make another high. Again, what is a breaker structure? We care about the bodies rather than the wicks. Okay, I'm just going to say that once and let you figure it out. We care about the bodies. So boom, we make that high here, make this low here. And then this is where the magic comes in. This is where the magic comes in. We understand that we like this H4 supply. We know we're potentially going to get a trade there. Okay, so what do? We just wait. Okay, time and price. Okay, also, let me go replay mode. Okay, before this happened, just actually go to H1 right here. Let's just switch this. Okay, so also within that supply zone, we also know that we want as tight entry as possible. Okay, so from here, this 1 hour candle, okay, if you put it just above there, it'll be 13 pips. Okay, just above there, about 10 pips. So I'll usually go for the safer option, okay, which will be just above the wick of that specific candle, because we know it's in our supply zone. Then we'll take that trade because nothing else is here. This is already covered. It's done. That's out of the game. This is already covered. That's done. That's out of the game. Okay, all of this price action here is already covered. That's out of the game. Okay, so we're not interested in that. We care about the candle that hasn't been mitigated as of yet. Okay, so when we hit play, or let's just exit out, this is why you get this hit right here. Very low risk, clean trade. Very low risk and clean trade. So what more can you ask for? So we get that hit right there. Clean, absolutely clean. And then from here, we break structure again. Again, if you remember what I said about the bodies rather than the wicks, we break structure there again. And then we hit this zone, break structure again. And then on the H2, I was looking at this on H1, but I found this on the H2. Okay, where am I? Okay, on the H2, we see this over here. Okay, get that clean hit in this area. Okay, very, very clean. Switch time frames. You could look at this in various ways. But you should go replay mode if I do this. Okay, you can look at this in various ways, but the H2 just seemed very clean for me. Okay, just understanding our order blocks, understanding our remorse candles, understanding market structure, the whole lot. So we looked at this various ways, and again, very low risk trade. So we just literally play in this area, just above here is all you needed. Again, 13 pips. 13 pips seems to be a magic number on GU. Okay, so very, very clean trade. Very, very clean. Again, on that H1, it was just literally 13 pips is all you needed. And then what are we targeting from there? Okay, what are we targeting from there? Where we just came from, that demand zone. Okay, because why are we targeting that zone? Let me go into the 4 hour again. Why are we targeting that zone? It's because we understood since price left here, we left big IPAs. Okay, we broke above these highs here. So we are technically in a bullish trend. Okay, on the smaller time frames, but still on a bearish on the bigger time frames. Again, you have to be understanding of various time frames to understand exactly what to do at what time on what time frame, and that's where the education comes into play. Okay, so we understood that if we took out the liquidity here, and the saying is as above, so below. So we don't what we need to do above. So what's below? Below was this target here. Okay, it looks like this before we actually did it. Okay, target. We knew we wanted that to take out, and then we did. So we had just that simple liquidity wipe. Okay, and then this low over here until we reach here. Again, why are we doing this? Again, get the fib to high. Again, look where 89% sits. So once we understood that, okay, we hit play. We just knew that was the target zone. And again, you notice what it always does. It always creates liquidity. Always, always, always creates liquidity before we get into our true area of interest. And this is when FOMC happened on Wednesday. Okay, FOMC happened Wednesday. We had that very crazy price action. And then since then, we're now, let's just X this out. We're now back into the zone. So as you can see, what I'm looking for straight away, okay, now we just made a break of structure and we made a high. So I'm now wondering, and I like this again on H2, I'm now wondering, okay, I'm already in a buy. I'm now wondering if this buy is going to hold because we've now broken structure. And what's the ultimate goal? Our ultimate goal is to go way up. Okay, so I'm now looking at this zone thinking, can it hold? Okay, it's coming to the end of the week. Again, we like to take our trades on specific days. Okay, can't release that on YouTube, but we like to take our trades on specific days. So I'm just thinking, yeah, this is gearing up perfectly, absolutely perfectly for the next week to come. Okay, so hopefully it does hold. Okay, because FOMC weeks are usually crazy. Okay, usually crazy. So we'll see if it does hold. Okay, but if it does hold in here, that'll be absolutely brilliant. That'll be great. And then we could go way up. Okay, so this will be a beautiful trade, absolutely beautiful trade if we can actually head back up. Okay, but overall, we are in a bearish trend in the bigger time frames. Okay, we're on a bearish trend in the bigger time frames. I just want price to head up into this area first before we complete what I truly want. Okay, so you can see here on a weekly, I want price to come up into this, come down into the zone here, and then shift away. Okay, so that's what we're going to see, hopefully. Okay, so you need the DXY and everything else to play along with that. Okay, so that's just simply how that trade was found, how we executed it. Okay, very, very clean. Again, like I said, if you do want to be part of this group and be part of just being a nice community of people that talk, help you. Okay, you post things in there, we're all helping each other. And let's just jump to the present. Okay, so yeah. Okay, facts. Anyone in gold? Okay, definitely in, perfect. Is that the gold trade I just sent out earlier on? Very clean. Okay, so to be part of this community, again, all the information is at the bottom of this video. Okay, so you can just simply click the link. okay, and then you'll be able to go into that straight away. Okay, so that was the breakdown of GBP USD entry over here, great entry, and then away we went. So very, very clean, very, very clean. So until next time, I'm gonna leave you with that, and I'll catch you on the flip side. Take care.